Greetings again and welcome to the Offshore conversation. This is the second session. Again, we're still on the show with Steve and Fred. Welcome back again, and let's walk into the second part of this conversation. We've concentrated on the pension coming together because these are big fours having big money. As Japheth, am I allowed to invest in offshore?
Japheth, so unfortunately at the moment, this is aimed mainly at what we call the wholesale investor or pension funds, but we will be opening this up in about a year's time to individuals such as yourself who can start putting in small amounts of regular money.
You're coming, Fred. You've seen Kenyans coming in, right? At an individual basis.
Definitely. I mean, the conversation that you're saying now is a speak towards dollarization of the economy, given the current challenges with the explicit depreciation, challenges the shilling. We've seen major currencies tend to strengthen against the dollar, but the shilling continued to depreciate. And since Kenya is a net importer, we are finding it quite a bit of a challenge to try and balance between how do we go about balancing that depreciation of the shilling. So we're saying the government is really trying to mitigate that. I think the central bank has indicated that the shilling has reached its fair value. I think that is something that we can debate. So we are still saying it going 140 and beyond. And it's time for trustees to now start looking at this offshore asset class more keenly than before, because the return expectations are able to match what they have put into the fixed income currently. So it will be critical for them to be able to see that the return expectations are really good going offshore. Individuals will also now get in there. There's a speak now to dollars. I think there are more Kenyans now holding more dollar accounts than 5 years ago, because it's a printing. If you bought dollars when they were 110, now they're at 141. So we are saying that curve continue to steepen, and very many individuals are keen to hold money in dollars.
Now, you talked about the regulators and governance is very key in terms of management of finances. If I give you the 5%, of course, the regulator internally says you can do 5% or 15%. And I give you the 15%, you run with it from America. How is my regulator seeing what is happening there? Or who helps me to regulate my money outside?
I think that's also a very important question, because trustees want to know that their money is secure. Star Capital is registered and licensed by the CMA and the RBA in Kenya, and we were very keen to make sure that that did occur so that we are accountable to the local regulators for everything that we do. The fund itself is operated out of a Mauritian collective investment scheme, and that fund is also regulated by the Mauritian regulators. So when we brought this fund into Kenya, the Kenyan regulators looked at the fund, looked at the regulations in Mauritius, and we report back to the Kenyan regulators on a regular basis.
While you advising a pension fund or an individual to work in, do you have a specific risk appetite that you recommend in the investment duration? So if you are a short person, don't go in for long, or if you're a tall person, don't go in for a short time.
Yes, I think risk is often misunderstood. So there's many elements of risk. For example, I like to use the example of if Kenya has just one share and you invest in just that one share. If that one share doesn't do well, you're exposed 100% of your money to that one share. If Kenya has two shares, your risk between them is almost half. Okay. And so it would go. If you've got too much money chasing a small pot of investments in, for example, Kenya, which happened, by the way, in South Africa, where the regulators were concerned that too much money was trying to be invested in too few opportunities. What happens is the cost of those opportunities becomes artificially increased. I'll give you a simple example. If you're really, really thirsty and there's only one Coca-Cola on the table and 10 guys all want that Coca-Cola, you're going to outbid each other until whoever pays the most will drink it, all right? But if there's 10 guys and 1 million bottles of Coca-Cola, the price is the price. Okay. So we are concerned, and I think your regulators are concerned, that there's going to be so much money from the retirement fund industry in Kenya chasing the opportunities in the Kenyan market that we need to just take some of the pressure off the Kenyan market and expose it to offshore. So in terms of risk, there's lots of different things about risk. Risk is higher where there is fewer opportunities. And in Kenya, you've got one currency, you've got a stock market that's dominated by Safaricom. You've got some bonds and you've got some property investments. Whereas around the world, you've got many, many different currencies, many different investment options, many different commodities being mined, many different farming products that are available to invest in, and many different government bonds and high-grade corporate bonds to invest in. So that reduces the risk, and our fund is exposed in very small bits to each of those different opportunities.
So in the reduction of risk, you think the appetite is good for most of the pension funds?
Trustees have a fiduciary duty, and in order not to jeopardize member benefits or member return, trustees' appetite to risk is typically very conservative. Hence, that can speak to how the portfolio construct of your typical pension fund is. They will go for the more of the monetary assets in their portfolio. So here we're talking bonds, we're talking cash. So that is key in any typical pension fund portfolio, closely followed by the real assets, equities, and property. Yeah. So we find Kenyan trustees love their property. However, the challenge is now that coming out of property, because it's very liquid in nature. Equities, they don't have the breadth and depth that Steve highlighted. We just have a few stocks that all pension funds are invested in those few stocks. And also now with the current regime, the bonds are not faring very well because of the interest rate, risk. So it's risk in the portfolio is that the trustees don't want to increase risk in the portfolio. However, they want to enjoy the benefits of diversification. Yeah. And that is where we are coming in and saying, when you look at the risk and return portfolio construct, how they construct the portfolios, that diversification automatically reduces risk. And that is why a small portion, around 1%, has been offshore. So you're not saying that most typical trustee portfolios don't have offshore at all. Some don't have, but those who have are in very small quantities. So what that does is that diversification will reduce the risk. However, you then allocate that to high return seeking assets. So you're still at the same level of risk, but getting a higher return. So you're not telling trustees this is the time to eliminate risk. Going offshore that will not eliminate risk in your portfolio, because how you're coming in is that you're able now to quantitatively determine how your different asset allocations will be strategically placed in a portfolio. And from there now, you're able now to drive that growth from that. So we're saying you don't need to elevate the risk by trying to mitigate all these challenges that you're facing today. However, you will still maintain the same level of risk and get a better return. So we're able to take the trustees through how they will be able to achieve that without elevating risk in their portfolios.
In terms of risk, there's another risk out there that affects pension funds. And we spoke about it earlier on, called inflation. Inflation is a big risk because if you've got a Kenyan shilling today that can buy something, if that something goes up tomorrow by 10%, then you would need 10% more shillings to buy that thing that you need. And so inflation's a real risk. And if you don't deal with that risk by going into assets that will perform better than inflation, then you aren't addressing the risk problem. So just by holding cash in Kenya, you might say, well, this is low risk. But in fact, it's guaranteed to be very risky because tomorrow the Kenyan shilling is worth less, or next month or next year it's worth less. So you've got to say, I don't want that risk. I'd rather take on some other risk, and that other risk, in exactly what Fred has said, is a medium risk offshore investment that's exposed to assets that can definitely perform better than inflation.
How, as they bring you the money, we've analyzed the risks and the returns that are coming in. Will you tell me to stay in for 1 year, 1 month, 1 day, 2 seconds? What is the best duration?
Well, these are pension fund assets. So pension funds, if you think about it, some members are 20 years and they will work until 60 or 65. So they're in the fund for 40 or 45 years. That's a very long time. Other members are close to retirement, so they might only be in the fund for 1 year or a couple of months even. But overall, pension funds are a long-term investment. It's really important for trustees to, when they allocate money to different assets, that they take the long-term view. Because if the trustees are making perhaps the biggest decision of all is how much money to put into offshore and how much money to keep in Kenya, if you're trying to do that by changing and chopping every 5 minutes, you're going to end up with a very poor return. You've really got to say, I'm going to say that we need 15% offshore and the balance of the money locally. What's happened in South Africa over the years is that we started off at 5% offshore. That was the maximum that our government allowed. We've over time gone to 45% offshore. And over time, all the pension funds have increased their allocation to offshore. So that's the first thing. The second thing is, remember that we said that the money is very liquid because it's in units. So if the fund needs money tomorrow, having invested, say, 6 weeks ago, a big amount, if they need a little amount to pay a pensioner, they can disinvest units within a couple of days, get the cash, and it's back in Kenya.
What are the boxes that I want to tick in my selection of the offshore fund that I should invest in?
I think our emphasis definitely is the time to go offshore is now. Trustees are faced by these multi-challenges that the offshore solution that we're offering a stack up to will be able to mitigate. We've highlighted inflation. We've highlighted rising interest rates, rising inflation, likelihood of a global recession, the depreciating Kenyan shilling. So it is time now to, go for biggest bang. We are back. Members need to start getting returns. We've seen 2022 losses coming in. It means the pension schemes are not becoming viable to members when every quarter or during the AGMs, trustees have to give negative returns to members. So we need to go into real assets this moment. We need to look at how do we drive that conversation to be able to give member benefit value. So the time is now, and Star Capital is here to provide that solution.
As we're looking at Star Capital, what should give us confidence? I mean, what should I check? The regulated certificates, what are all those?
I think that's a fantastic question. And probably the most important question any trustee asks. So let's have a look at some of the things. You need to find out, is the company registered with the Capital Markets Authority, CMA? If yes, then they've obviously done some due diligence. Your regulator's done some checks on who the owners of the business are, who the principal key role players are in that business, and to make sure that that business is well managed and has lots of good governance in it. The second thing is the business registered with the RBA, the Retirement Benefit Authority? Because they want to make sure that the manager managing retirement fund assets understands the retirement fund industry well. Star Capital ticks that box and ticks the CMA box. The next thing is you want to make sure that the business has got adequate capital. All right. The regulators in Kenya have sat down and said that the business must have a minimum of 10 million shillings as an asset base. And when you start investing money as the amount of money that you have, then you need 8% of that money put away as a capital base for the operations. Again, Star Capital ticks that box, and our financials are advertised in the newspaper every 6 months and every year. Okay. Then you've got to look, perhaps the next most important thing is you've got to look at the people who are actually doing the investments. Do they have the necessary skills? Now, Andrew, our Chief Investment Officer, is a qualified actuary. He has worked with the World Bank. He has done a lot of work in Kenya with the RBA. Very well qualified, very experienced in the retirement markets. He's not only an actuary, but he's also a CFA charter member. In other words, he has gone through, and CFA, by the way, is one of the top qualifications for asset management. So he is a CFA chartered member, and he is well qualified. Around him, he has got a team of people in London who all are qualified. In Mauritius, our team there is headed up by a CFA. Okay. Our management of the company, our directors, are well qualified. I have 2 postgraduate qualifications. I've been in the pension fund industry, as you can see from my grey hair, since 1976. Okay, I'm on the advisory board of companies like Sequoia in America, and so I fully understand the pension fund industry. Other chaps like Paul Horsfall is a chartered accountant in South Africa. He was the president of UPS in Africa. So these are top businessmen around the world coming together. Our CEO is also an actuary. So he is an actuary in the pension fund space in Kenya. So he has absolutely wonderful knowledge about pension funds in the Kenyan market. So we've got a broad range of experience, an actuary based in the UK, a CFA based in the UK. We've got CFAs in Mauritius. We've got great management together with local management and Fred to run this business on behalf of our clients.
Wow. I like that. In summary, you're just saying, looking at the regulation, you're also looking at the capacity of the company, the capacity you're mentioning, the talent and the asset base. And then you're also mentioning the performance. Fred, recession. And, people are afraid it's happening. They want all their money back. What is your advice? Is it the right time?
How do trustees mitigate recession in their portfolios? I think that is a key conversation, so that they can sleep easy at night, knowing that they'll be able to report positive returns to members. So this is the time to reallocate your portfolio to real assets. Yeah. And given what you've highlighted in terms of the breadth and depth of our Nairobi Stock Exchange, which just has a few stocks, and Steve has highlighted to a lot of retirement money just chasing few opportunities within. So you need to reallocate your portfolio to real assets, and the real assets that are able to give that high return in the offshore aspect. And that is, you're saying that 15%, trustees need to maximize on that to drive that return in the global space. Because as we started this conversation, we did talk about the Apple and iPhone. The current valuation is looking at $3 trillion. An Apple share 16 years ago at the launch of an iPhone was $16, maybe some cents on top. The current value of an Apple share is now almost looking at $200. Yeah. We looked at the example of a local IPO that was listed at around the same time, the Kenya Re, at 9 shillings and some cents, is now currently at a shilling. So these opportunities they're very clear, and it is time that now trustees need to start having the confidence, the necessary knowledge and understanding of this market. And as Star Capital, we are very keen to walk this journey with them.
So Steve, Fred is really campaigning with a good advantage in this. I love that. Now you mentioned number one is pension schemes, development strategy long term. And then you also mentioned that America is reckless free. And there's the conversation of de-dollarization. It's a hunting star. Do you think, because we have a long-term investment and there's a long-term proposition of de-dollarization, do we stand to be affected by this?
No, I don't think so, because our teams are looking at the current situation around the world, but taking into account events as they happen. So, for example, no one anticipated the war between Russia and the Ukraine. Maybe the people sort of thought it might happen, but it did happen, despite the fact that the president of Russia said he was only putting troops there just to stop a problem. So you've got to take these things into account as you allocate money around the world. And our teams are fully in tune with what is going on around the world. So if there was a view that the dollar would fall off its pedestal, then we would know about that perhaps before it has happened and start maybe making decisions. Should we move out of the dollar? And with these funds, we can quickly and easily do that over time. So we call it a heat map, where we show the different the underlying assets in their particular categories, and you can see it over time moving slightly. And that is because our teams are looking at it all the time. So we don't believe that there is a risk because we're exposed to the dollar. We also have money in Asia, exposed to Asian currencies. We have money in Europe exposed to both the euro and the British pound. So we are looking at different currencies as well.
That he talks of ease of portfolio construction, just moving from America to Asia because of anything. talking of somebody who has decided, I don't want my money to be moved from America to Kenya. I want my money right now back to Kenya. How easy is that?
The underlying assets are invested in what we've called exchange-traded funds. So as Star Capital, the fund that is domiciled in Mauritius, the collective investment scheme that pools all these monies from local Kenyan pension funds, is already invested in exchange-traded funds. An ETF provides that liquidity. It's listed and is easy for trustees to access the liquidity out of those international markets. We are aware of some challenges that trustees have, especially around exiting some of these assets in the offshore investments, because either the concentration is specifically in one region and in one sector, and some of these multi-asset managers are not domiciled locally. You will not see those big multi-asset managers domiciled here in Kenya. Star Capital is here. You're able to interact and engage with the owners of the business on a daily basis. That gives you that level of comfort that should you want or should you see the need to liquidate that portion of your portfolio that speaks to offshore, we are available to provide that to you. So part of our service level agreements with the trustees will even show the timelines of how the liquidity process is done. So if it's T+2, you're able to get your money within that period of time. So we're able to have that granular aspect of how we will manage these assets on behalf of the trustees on that delegated authorization from them. And in the event of any liquidity needs, we should be able to provide them.
You have the same confidence that you can send me money back?
Absolutely. And the reason for that is that we, again, are invested in many, many, many places around the world. So if one part of the world is not in a great shape and is trying to hold on to the money, the rest is liquid. So as Fred said, we can give a sell signal today. We sell those assets today, literally. And as soon as the cash is received in the collective investment scheme, and there also has to always be a certain amount of cash held in the collective investment scheme. So we are then able to transfer that money from Mauritius dollars back into Kenyan shillings. And because it's going from dollars to Kenyan shillings, you can imagine that they will be easily exchanged this side.
Yes.
Okay. So I'm very confident that this fund is perhaps a lot more liquid than many of the local assets.
The other day, I saw people taking off out of PQ, the airline, and the experts were hiding away and was saying, people are running away with their money. What has been the trend in terms of active fees offshore? Do you think a lot of money is really moving out?
Yes, I think we've seen in the recent news, even the regulator, the central bank of Kenya, giving access to foreign accounts. So it has been the norm for high net worth individuals. Whether this money is gained through other means, it's mostly stashed offshore. We've seen, some havens out there provide illicit flow of ill-gained wealth in some of this, mostly of the African continent, to what you call offshore markets, where they can place their monies comfortably. However, if you look at what Steve highlighted, there's a lot of KYC regulations around Star Capital because of the oversight provided by the Capital Markets Authority as well as the Retirement Benefits Authority. So your typical pension fund already ticks all the right boxes in terms of meeting those concerns of illicit flow of money. So our KYC will tick all that to ensure that we are not in any conflict with that aspect of how that cash flow is seen. Yeah.
Yeah. Good. Steve, the government did not send me, but I just wanted to ask, is it possible to keep illegal money outside the country?
Not through our fund. Fred has alluded to the very onerous duties as a registered business in Kenya, that we have to make sure that we are well aware of the anti-money laundering requirements, as well as the knowing your client requirements. So a lot of people have this view that offshore money must be illegal. Around the world, that's not the case. Around the world, the vast majority of money is sitting there from very legal sources, mainly wholesale funds of retirement funds from around the world. Even American pension funds don't only invest in America, they invest all over the world for the very reasons that we have established it's a good idea to do so. So people have a perception that because it's offshore, it's illegal. That's not really the case. It's very hard now for criminals and people to move illicit money around the world without going through many what they call money laundering hoops to make it so. But we are only currently accepting money from a retirement fund.
We really appreciate Fred and Steve. Maybe just to give you a minute or a half a minute to give you a parting shot, and then Steve a parting shot.
Thank you. We are definitely looking forward to get a lot more inquiries through this session that we've had today, courtesy of World Money TV. To the viewers and the listeners, please feel free to reach in touch. Keep in touch with us. If you have any questions, our website is up and running. We're open for inquiries, and we're looking forward to engage with trustee boards to ensure that we add value to your pension portfolios.
Thanks, Fred. Absolutely. I think, Ian Wealth, congratulations on your TV program. I've been coming to Kenya for many years now, and I've become very familiar with the Ian Wealth brand, and we're excited to work with you. So thank you for the opportunity, and we wish you all the very best in the future.
Thank you. Thank you very much, friends, and thank you, Steve. We appreciate your coming to the show, and thank you for the wisdom you've shared with us. And thank you very much, our viewers. We really appreciate that you have stayed to learn all through. And as well, we've always been advising you to take notes, to always be careful to get to pick the lessons from the conversation. Remember to chat us on the comment section. Remember to like the video. Remember to share it outside there. Should you have any questions, we have our contacts highlighted down here. Please feel free to reach out, and we can always connect you with Steve and Fred for any other clarification needed. Until we see you in the next show, God bless you, and go offshore.